All right. How are we going there, guys? It looks like I was meant to press the unmute button and I accidentally hit the stop streaming button. So here we go. We've got issues again with the streaming, but no, it's just myself. I only had two coffees today, so that's probably the problem. How are you, Darren? Hope you're good. Hope everyone else is good as well. Sorry for just kicking you out and in again. G'day, Paul. Hope we're going well. Hope you all had a good weekend. I know I've been fairly busy. Most weekends have been fairly busy. I guess anyone with a wife would appreciate that. Keeps you busy. She keeps me on my toes. Always wanting to do something outside. So, it's good though. We had some kids over, one of my little fella's friends yesterday. Um, so it kept us busy during the day, which is good. Um, and Saturday was just a basketball morning, and then a bit of relaxing. So caught up in a bit of work last night as well. Just going through some charts, having a look at different things. It's good to spend some time outside of hours. So you're not rushing around. You can just, especially on the weekends. I know the system I've got, Spark, it keeps everything in the system up until about 7 o'clock. I think it's about 7 a.m. Of that morning. So Monday morning, it'll reset itself. So you got all weekend to go and look through some charts, look at the ASX, just to see what the volumes were, through the day and all that sort of stuff. So it's a good time just to catch up on some charts, see what's moving into the close. All that's important. So yeah, hope everyone had a great weekend. Now we'll get stuck into it. First things first. I just want to say I'm not in next Monday. There's no stream. I'm actually heading up to Port Douglas for a week. I will be, for anyone with the TradeSetup app and is getting alerts, I'll still be plugging away doing that. I'll be taking my laptop up there, and for sure we'll be keeping on top of any alerts we've got going, any positions, whether we need to take a profit. I don't think there's too many we're taking a profit at the moment, but mainly just the stops. If there is anything new, I will look over them. Anything new, I will send it out. But in way of the stream, it's smack at 12:30 on a Monday. I'll probably be in the pool by then. G'day, Lauren. How are you, mate? So just letting you know, it won't be on next Monday. Monday after, no problem. Um, yeah, if there's anything you desperately want to take, especially to take a look at, because the stream's not on, just send us through an alert. Sorry, send us through an email to support@tradesetup.com.au. And what I'll do is just, if I get a chance at night, just to quickly go through, because I'll be looking at the computer anyway each day. So yeah, I thought I'll let you know that. I hope everyone else is going to have a bit of a break. I don't know if anyone with kids, it's probably more likely school holidays, so a bit of a break would be good. Yeah, so anyone that's new, welcome. We'll go through the usual stuff. Top left-hand corner is the Twitter @trade_setup. If you just join us there, anything you like, feel free to like it, pass it on. Facebook's the top right-hand corner, which much of the same stuff we get posted. We're more active on on Twitter. In the bottom right-hand corner, subscribe to us at our YouTube channel. And also, we just give general advice. Anything we talk about is just opinions. There's no personal advice involved in it. Now, I'll get rid of that. What I want to do today, I was just going to have a bit of a chat about. Basically, we'll go through the markets as usual. Just take a look. They didn't move too much on the weekend. Sorry, on Friday. US has backed off a bit, but they are at all-time highs. I mean, the S&P is just, I think the S&P is just ticking the all-time highs. So is the Dow, only by a few points, really. So it's really in that zone where I wouldn't say it's an each-way bet, but it could be at a tipping point. So it'd be interesting to see going forward how we approach that level where the market can push through it. If it pushes through and starts to pull back, I get a bit skeptical that it's going to be a major washout. But then it's going to take some time to build that picture back up. Either way, I think if it washes out, pops through and pulls back, it's either going to be a washout or a major correction. I think the speed of the pullback will be the key, and whether or not it can, if it has a deep enough, so it pops up, washes out, pulls back, deep correction, and then pops back and retests a bit lower, it could be a lower high, and that's what's going to get people spooked, I think, because everyone's really sitting around waiting for this pullback in the US. That's the way it's looking at the moment. Everyone's saying, the bears are out. Everyone's got their bear suit on. I think it's going to tip over. It keeps trickling high, and that's probably the best time too to also catch people off guard that have been either shorting the market or waiting for a pullback, especially when you pop through a key level. A lot of the retail will be looking at that, going, if it doesn't pull back there, I'm going to get in, and they load up. Bang! Sure enough, it pulls back, cleans them out, stops them back out, and resets again. So it'd be interesting to see the price action going forward. I think it's going to take some time to play out too, unless, of course, the one scenario which you can't discount also, it's just plowing through and keep going. So basically, the way I'm looking at it is approaching levels. We'll just get up there while I'm talking about it, especially on the Dow and the S&P, because that's what's leading us astray. That's not what I want. Here's the Dow, better off. Actually, no, daily charts, picking it up. There we go. So you can see that key level. It's around that 27 mark. It took out this previous high, but it's really just gunning for this high at, was it 26,951? I think it traded there. No, it didn't quite get there. It's 50 points shy. So it's really just targeting. It's that big zone through here on the Dow, and the S&P is probably a lot of the same. Yeah, it's taken out this high, but so did this. So it's really just edging up into that zone where this could be a washout, pulls back. You just want to see what happens in the next few days. I mean, if this plows through, it's going to be a big effort. That's why I'm not discounting that, but at the same time, g'day, Helen. Helen's in. Uh-oh. So I just got to give him a stick. So you can see that how it's pushed up through these highs. It is stretched, and it's a big ask for a market that's stretched, and especially this V shape. I'm always suspect of these sort of V-shaped recoveries. Same here. I mean, they catch a lot of people off guard, and they start chasing it higher. We chase it right up to the all-time highs. I mean, there's no reason why it can't keep going, but I think probability is a fair bit lower. I think it could more than likely, if it gets through a couple of days, it's going to drag in some late buys, turn around, roll over, squeeze them out, and then we'll have to just see what happens. I mean, if it starts to reset at a higher level, say 28, 75, 29, resets around there and chops around a bit, then I think that could be the move that takes us into takes us stronger through those highs rather than just a few points above, but it takes us good strong moves through those highs. It's only really the US that's up there. The headwinds, the usual. Now that we've got over the interest rates, we know that potentially we're going to be supported by 1 or 2 cuts, maybe 3 cuts this year in the US. So that's going to be good for equities. I mean, it's a sort of an unusual situation. Usually they cut rates when the market's starting to drop like a stone. Instead, we're rallying to all-time highs and they're cutting rates. So it's kind of an unusual situation there. You really got to be sitting there if you're trading US. What are valuations doing? All-time highs. How much more room can they have to keep moving higher? Maybe they have, maybe they haven't. But it's just something we have to take as we go. What was the other thing I was going to say? Gone in one ear and out the other. That's gone. I'm sure it was important, but yeah. So interest rates. That's over and done with. Everyone's market. The market was bought up on the back of that. Now it's the main focus is going to be back onto trade disputes. So the G20, I think it's on Friday. Day one might be Friday or Thursday. Friday this week. So I wouldn't expect the market to get too excited before that. G'day, Gino. I wouldn't expect the market to get too excited before that because, that could go each way. You can see the banter over the past. US will keep, banging their drums, talking it up into tariffs. But China is starting to take a bit more of a harsher tone, a bit more of an offensive tone. Not offensive as in, but they're on the offense rather than, and they're just sort of talking it up a bit as well. So we'll see how that goes. I wouldn't expect a resolution, but it's more we want to see some positive news. We want to see them step towards a resolution, to start taking the steps towards it. And that's happened in the past. We thought that was going to happen, and then all of a sudden, tariffs are being bumped up again. And I think they were saying that if they don't come to resolution, the US is going to potentially raise tariffs again on I don't know, remember how many. So There's these sorts of things we're to watch out for. I think the market's going to just, again, we're back to the old tariff scenario where we're just going to wait and see what happens there. Of course, if they sort themselves out and tariffs get lifted down the track, if that's what the market's going to be gunning towards as the news becomes positive, then it could drive the market straight higher, really start to kick on. We might get a massive blowout and then the market rollover, have to reset. I mean, all these sorts of things, all we can do is try to check out the macro picture, understand what's happening, what's pushing the markets, what's driving the markets, and build our positions around that. Those two markets, the FTSE, the FTSE's up towards that 7,500 mark. It's not a high, it's not really a key high, I would say either. Let me just draw this up. Oh, actually, you can see, we don't really need to draw it up, but you can see this 7150 level of this leg up. That was pretty much the anchor to that leg up. You can see the big push up, pull back, anchor, push up, pull back, retest these lows, wash it out. That's the anchor in my eyes. Secondary push up, another deep correction back to the MAs, another push up. But we really have just washed out that level without finishing below it. So for me, that's still the anchor. We're still testing it. We're still technically in an uptrend. So that's not a really key level, I would say, but it is a high that it's going to come into contact with. It's going to have to potentially react off that low, off that 75 mark, go lower, could form a double top, could just plow straight through it, fine. They've still got Brexit issues over in the UK. I can't remember his name, the goof that rides around on the bike. There's a high likelihood that he could become Prime Minister, and he's a hard Brexiter, hardline Brexiter. So I don't know what's going to happen there. I don't know how the UK is going to take it. I know the pound did take a bit of a beating on Friday before the US dollar sold off and the pound bounced back again. It bounced back up, made back all the losses plus a bit more, whereas the euro was just consolidated and then took off on US dollar weakness. Aussie was a bit the same as the pound. Did get sold down and then bounced back up again, but the Aussie was just lagging a bit compared to the other two major currencies. Boris, that's the one. The old Boris Johnson, isn't it? DAX, yeah, back, a bit like the FTSE's back towards that 12,400. So again, it's not a key level, but it's a bit like the US where we're at a high. Are we reacting lower? Are we going to go straight through it? We're going to plow through it? Who knows? Now the ASX, what else we got? We'll look at the Hang Seng. Sort of no man's land at the moment, getting a bit stretched up here. Could be struggling. That's the Hang Seng. We've got the Nikkei. A bit the same. Is that the week? Let's go to the weekly. The weekly doesn't look so great on that Nikkei. You got essentially a double top up here. Took out the anchor level, which was around that 20,500. This big push down into December. Bounced back up. You can see it got stretched, lower high compared to the previous low highs at 24,000. Rolled over, and that's broken. That uptrend was broken with this push down. So really, we could be holding lower highs here. I mean, who knows? But it's looking a bit more negative if we're going to get on the Nikkei. That first move down, this is a secondary move down, could take us down to 17,000, back sort of in this zone from back in 2016. Don't know, that could be unlikely, but technically there is a possibility we're going to hold lower highs and the pressure's going to be on. What does the Nikkei longer term look like? Nikkei longer term doesn't look too bad, good solid uptrend. 2018 was not a great year for them. Bounced back up this year to 30,000. We rolled over, but it has had a good week last week, and we're just going to see if this could pop back up again. So really, it could just hold. This could be a key, support zone through here. Another, right back in the longer term support zone, which, it looks like that, and around that 27,000 mark, and then start to bounce. Just have to keep an eye on it. Now the ASX backed off the last couple of days. Probably nothing that's really unexpected. The market's up. The trend is up. We bounced off the MAs here. Nothing's really changed apart from it getting a bit extended up towards 67,000, a couple of down days. Now these, even today, look at the way it's retraced. I don't know how much we've bounced. Just look at an intraday chart. Lows of 62, 66.20. So we bounced about 20, 25 points off the lows today. That's not bad. It's not really a sign of a really bearish market. What have I got here? a really bearish market. So this leads, I don't know if this is going to happen again. Like we saw before, we said that the press up to 66 consolidation. I thought we'd roll over a bit more than that. Instead, we just took off. So what was that? Tuesday, Wednesday, Thursday last week up to 67. Whether we're just going to back up or whether we have to consolidate a bit more, let the MAs catch up, bounce off the MAs, and then we go again. I still think longer term, you can see we're going to give this the all-time highs a bit of a run. What's that? 68.51. It's only really 200 points away. We can do that in a couple of days, with a good solid effort from the US. If the US pumps through those highs, that'll probably drag us up, and I think we're going to project up into those highs. I mean, there's nothing really in its way just at the moment when it's only 200 points, but it'd be interesting to see what we do when we get up there. The monthly is looking stretched, the weekly stretched, and the daily stretched. So it's not a time to be euphoric, but at the same time, you've got to follow the trend, and just follow it high, and just know where your stop is, know where your risk is. It's especially important as you start jamming up to these highs. We've got all markets are up, sort of, especially the US and us. We're approaching all-time highs. US is getting to new all-time highs. You've just got to know where your risk is, because not saying when, but if things turn, they're generally going to turn pretty hard and fast. And if you don't know where your risk is, you go from up 10% to down 10% sort of really quickly on your positions. And really, you've got to know where your risk is, and don't be scared to take it on the chin and reset. Because I think if it goes hard, you're going to get a chance. If it looks great, you're going to get more than enough opportunity to get back into a better price on your individual stocks. But we'll see. We'll see. Now, what I wanted to go over was to try to refine your entries, and it's more just timing of your entries. I just had one that I've been watching. Actually, let's get here. I know Laurent will know this one. MVP. I was watching this one. I'm thinking that up a bit. We should go to the weekly. So I've been watching this one. I was a bit of an advocate for it. I had it a while ago. I can't remember how I got in and got out. But look, I made, all in all, I wrote all this up and come back down and made a small gain on the way back down, as in watched it all evaporate on me. So I took it out from the small gain. But the company itself, fundamentally, they've got a really good product. Penthrox. I don't know if anyone's been doing a bit of reading on it, but they've been opening up channels, I don't know, distribution channels pretty much around the globe. So they just keep pumping out new distribution channels, and to pump out the Penthrox, which is the non-opioid, what do you call it? Pain relief. So I think, good product. They're doing good things. They're pushing it out there. It's been adopted quite widely, but I think the big one, which probably saw this sell-off, is the US. They're waiting to get some sort of approval. Now that got delayed, extended, and as the US probably is, they're probably delaying everything till they come out with their own product. But all in all, that's probably what saw that sell-off. So I think obviously you can see the value coming back in. Now that's just me banging on about fundamentals, but you can see it's traded down to sort of that 360. It bounced off quite hard. There was director selling in there too, which the market didn't take too well. Obviously got knocked in the head. Anytime you see a director sell, most people are going to be suspect, because if you're in the know, and everyone knows that information's leaked quite a bit, if you're in the know and it's a fantastic product with really good prospects, no one's going to sell. Simple as that. So whatever excuse a director gives for selling is generally rubbish. It's more they just want to lock in money. So yeah, that's what drove the market down. It's got that extra push down. That's probably, I assume, why it took out this low at around that 420 mark. Yeah, what it's done since, it popped up, had a good little run up to sort of towards 6 again, and then got sold all the way back down. But then it held around that 360 mark, that good, solid support zone there, and started to lift. So we've seen this good lift up. What we've seen as it started approaching back up towards 6, it rolled over, and of course you're going to get profit taking here. Anyone that didn't sell through here, and you see this major bottom put in place, major support zone, they're getting more confident that when it starts to sell, they're probably going to start to lock in gains, going, look, I'm not going to hold it. This could roll over again. We haven't taken out that high. We're going to go down to the low. All the fear that starts driving the emotions to get in or get out, mainly get out in this respect. So there's a bit of buyers who bought it, took it off this low, at 360, looking good. Double bottom, triple bottom, bought in there. Good reason to buy. They'll be gunning for those highs. Got up there, took some profit, or at least took some off the table. And that's why you've seen the market roll over. Now it sat on top of those MAs and it popped back up. And especially when you look at this candle, quite a healthy candle. That was on the 23rd of May. What we saw after that was pretty much the consolidation through up until, say, this day, 20th. What was that? On Thursday? All right, Thursday, I think it was. A good pop up on Thursday. Now, I was originally trying to buy that somewhere around 524, 525 mark, but here, and then I just left it. It started going. I left it the next couple of days. It did go. You did get a chance. If I just left a bit in there, would have been good, and that would have been on the 19th. If I just left a buy there at 524, it would have got set. It got down to 13, I think, 14. Risk was about 510, no problem. Then took off to 560. But I didn't really want to do that. And the reason behind it, that all looks great, but the reason behind it was it was very thin. Now, if anyone knows Spark, I'll put it up here. These are all your bids and your offers. Sorry, phone's coming through. All your bids and offers, but you can see it's quite thin. I mean, if you also watch the depth a bit, you know that they do load up. So I mean, this offer here, we've got 20,000, 100 grand's worth at 560. It doesn't necessarily mean they want to get set. They're just trying to force it down. So there's a lot of argy-bargy that goes on when you look at it depth. And they play around it. They might stack up the offers because they're trying to fluff in. If someone's holding it, say from 520, and they're watching these offers stack up, they'll just jump ahead of it. But what the offers are trying to do is just trying to buy into it. They're just trying to stack up the offers, push it down, and then either they hit the market, the sellers come and hit them on there, and they're starting to build a position around the 20s or 30s. You don't know what they're trying to do, but a lot of the time this liquidity that you see on the offer is just rubbish. The problem is if it's not, you look on the other side, there's not much buying there either. Now that doesn't mean a hell of a lot. The market can easily pop down and get swept back up quite easily, which it did when it went from about 525 down to 5. Was it 5? I said 514. So it got nutted down, but then straight back up again. So that was a good sign. But the problem is it's just thin, and it wouldn't take much for a few stops to be placed somewhere around there that get triggered and just take it straight down below. You get stopped out, below your 510 mark. So, for instance, when I was trying to buy at 524 or 5, would have been, and I like to use a hard stop, say at 510. Now, there's not many bids in front of me between where I get in, and that's quite, it's a few percent move. There's not many bids stacked up in between. There's not enough volume to sort of watch it and sit behind, if that makes sense. So when you're for instance, that's not a very good one either. CBA. Just trying to think of something that's got a Bendigo. You can see the offer stacked up there, but if you bought it here, for instance, and you were behind, this is Bendigo, you were behind, 1149. You know there's a bit of volume that's got to be chewed through, and you're not going to get tagged with a stop because there are going to be some massive stops to start getting triggered to get all this volume out, and you get tagged. People are going to chase it low, but whereas MVP, potentially yes, if I was sitting at 510, and then I would have had to take a bit of slippage as well down to 508. So that's what had me a bit concerned when I'm looking to trade it. So that's probably the one thing that kept me out of buying it back in on this day, even chasing it through 535, I think it was. And also watching that and watching the price action from previously, it does tend to have a good run up and then come straight back down again, retest the lows, even push down. I'm just trying to find a better example. It's probably back here. You can see that it's probably a similar type of scenario. Had a good run up, straight up to the highs before, and then spent the next few weeks edging lower, and then before it really had its run, tested that sort of low 3 times. So you just got to watch, I guess, when you're trying to refine your entry and and the idea behind trying to refine your entry and looking at, I don't know who looks at volume, but sometimes it could be worth looking at volume. Vin, the product, this is Spark is the platform that I'm using. It's not free. You can get a 14-day free trial, but it's probably a couple $100 a month, I think. But this product, is MVP, Medical Developments International Limited. Bit of a tongue twister. So where was I? God, I'm easily swayed, aren't I? So when you're trying to refine your entry, you want to see a few factors. I mean, I obviously want to see the volume. Now, the volume did pick up on this day with that little run up, but prior to that, it really wasn't building that much. So that gets me suspect. You know, you got a couple of good days here. You can see when it got to the high, this green candle, yeah, a couple of good days of slightly larger than expected volume, but that doesn't mean a lot to me. I want to see more of average volume over a good couple of weeks. When it's getting soaked up, I want to see more of that selling pressure that's coming in and the buyers are soaking up and they're happy to build, you know, as opposed to what we saw on the offer. I want to see them build. I want to see that start to stack up. I want to see quite a few in there because that means it's not just someone that might be playing with the market, but there's a lot bigger, a bigger group of people that are willing to, excuse me, are willing to buy into this stock. So you want to see that start to stack up. You want to see that get a bit thicker, if that makes sense. So there's not, you know, from here we've got what 5, then 501, nothing. The next one up is 505. So you got a 4 or 3 cent spread there, or nothing. Next level there's nothing, and then you got 507, 508, nothing, something, nothing. So you can see that. Imagine this big gap. So you got a bid at 520. Next bid down is at 515. So that's a 5 cent slippage. If you were triggered to stop out at 520 or 519, for example, it went through 520, bang, you get 5 cent slippage. You don't really want that. You want to be able to lean on, you want enough liquidity there or volume there that you can lean on it. So if you have to get stopped out, you're going to minimize your slippage as much as possible. That's one reason, but it also makes sure that it's a good sign that there's people in there willing to buy it. Yeah, I'd say this is similar to Iris. Probably Iris is competitive. I like this. You can actually trade through this. Actually, you might be able to. There might be another extra fee you can pay, and you can get a data feed into it, and you can trade through Spark. But generally, I don't trade through this at all. Well, I can't. I'm not set up to trade through Spark. Whereas Iris, the bulk of it, you get the same sort of information through Iris. I just heard Iris is a bit less, having a few issues of late. I can't remember years ago when I used Iris. I can't remember how. I think it was pretty good. I didn't seem to have too many problems with it. So yeah, you see, this is the one reason what sort of kept me out. You want to see the volume increase. So you want to see it start to build. You want to see it start to build when it pops up. And on the pullback, you know, shallow, no volume much on this pullback. So you can see this pullback here. There's really no volume before, and there's no volume when it was starting to take off. Yeah, really little volume. So this leg up here was quite thinly traded, even though it did work out okay. This move down, again, the volume really didn't pick up down here. So it's just, to me, by looking at the volume with the moves up and the moves down, it's quite thin. So these sorts of things, and that's why I wasn't really happy when I saw this push up here. I wasn't happy to buy it on a break of through that high, which I traditionally would have been. And what's that high of 551? Buying at 551 with a stop at around 510. I had just had a feeling that with the way it's trading and the lack of volume that's coming through on this move here, that it was going to be a bit of a washout, which lucky enough it was. And it's come all the way back down again, and what it hit 512 today, so that could have been a stop out. 2 cents low, and it would have been a stop out for no reason. And that's percent wise, it's quite a big bit of risk. So what you're also always trying to do, I guess, you're trying to buy when the market's rising. You're going to buy it on the rise, and you want to have these key factors support the reasoning behind. Because the last thing you want to do is it's actually heading higher, but you're the only one. Well, there's only minimal people that are interested in buying it, which would show up in volume. If it's got some really good support, you can see these rallies start to come with volume and volume on the way up, and then volume thins out on the way down when you pull back to the MAs. But when it starts to go again, that volume comes back in. So you just know that there's quite a few buys that are starting to stack up and support it. And you should see in the market depth too, like I was saying, that volume start to support. So if something does go wrong, you've got some volume to lean onto. I hope this is making sense, guys, but it's just that's probably the reasoning. I just wanted to go through the reasoning why I was looking to. I wanted to buy it. I love the chart. I like the look of that chart. Maybe the last couple of days is not what I wanted to see. I'd rather have seen it, well, probably just today, hold up around that 530 to 540 mark, consolidate there, and I would love to have seen some more volume pickup at that level. It just shows me that buyers are willing to step up to the plate. Buyers are willing to step up. So if that's the case and they're trying to build a position, which is I'm always in the back of my mind, that's the theory behind it, If someone's building a big position, they're going to have to buy it on the rise. The pros will never, they don't average down. Generally don't average down at all. And I don't think anyone should really average down. You're happy to take a nibble at a stock, when it's here, when it's starting to rise, building position as it's starting to rise. And then it gives you the opportunity, if you start to roll over, this period, you can take off some, but you can keep a core position rather than you think it's great here. So you buy some here. Okay, I'll buy some more here, buy some more there. And then you're buying some more there. It's turned out okay, but who's to say that's not going to roll over? If we go back to here, you're buying here on the way down, you think it's a great stock, it's going to go to $10. Yeah, buy some here. Look, I'll buy some, boom, straight down. Okay, buy some more, boom, straight down. That's not the way to trade at all. And I think I always try to steer clear. So if there is someone building a position, you want to see that coming in with the volume. You want to see that volume pick up, and you want to see that evidence of volume coming into the market at higher levels. People are willing to support higher levels. In this case, as long as that anchor doesn't break, but I want to see, say today, a bit more volume come in. So if the sellers are starting to get a bit scared and nervous that this is going to break through that support zone or even target back down to 480, you want to see that soaked up with volume. So if the sellers do start to come in and start to hit the bid, it's getting soaked up. And the market's not actually moving. So the price is not getting through this 510, 515 zone, but the volume's increasing. It's a good sign that they're soaking it up. And if it starts to lift and then reset at a higher level, then you've got some more volume. So it's just a good sign you've got buys, the bias is going to be up, buyers like it, and it's worth taking a risk at. So anyway, that's a bit of a sermon there. The other one this is one I just saw recently. So probably for me, this is a bit of a different story. You can see the volume through here, it was quite thin. You had your day rally and volume, a couple of days here. Obviously, when it's gapped down, it's caught a few off guard. They've taken it off. It's come down here, but you can see the change. I'll draw that up. This is WAF, West African Resources. Can you see the volume down there? Yep, no worries. So you can see the change in the volume when it's stacking up through. It's quite a few days of heavier volume when it's starting to rise. When you start to come back down here, lack of volume in this, but then when it started to rally on this little leg up, volume was coming in quite heavy. So that's a good sign that buyers are getting interested. It's a good value, maybe it's really good value down around that 22 to 25 mark. Started to come in a bit again here. That was just as we start to rally. So this sell-off here was quite relatively low. You can see just on this just prior to that low on the stochastics, that oversold mark, the volume wasn't too low. When it started to lift, you get a couple of good days. Got up to the high, struggled, come rolling over. Volume was coming down again. You can see that's just easing off as we sort of get stuck in this range. Volume picks up the last couple of days as we press back up again. So you can see the difference here is that when it's rallying, it's coming with volume. Volume's coming in. At the moment, the structure, I'm just keeping an eye on that price action because it could easily get a bit extended, into these highs. I'll just say through 33 to 34, get a bit extended up here, which it is here, did here, back here again, and could sell off. So I don't really want to buy just yet, and it hasn't really broken out. So it's more consolidating these highs within that range of say 27 to 33 or 34, 5 or 6 cent range, or 6 or 7 cent range, sorry. Could just consolidate there. So I don't really want to be buyer right up here, and then it pulls all the way back. I can get a better price. And if it's going to pop through, I'd rather pop through, pull back, test. You can see the volume start to come in on a retest and then jump in. That would be my plan of attack for WAF. But yeah, you can just see the difference in what we're seeing as what we looked at prior to MVP. It's lacking the volume. The structure looks great, but there wasn't that much volume to sort of lean on. If we go to the market depths, I'd say you can see, okay, they're stacked up here. You can see they're stacked up around, there's a bit of a gap here, but there's some buys stacked up at, 29, 30 and a half, 31, 32, 31 and a half, and so on. And stacked up again a bit lower from 29 down to 26 or so. Some really good handy volume. So I'm more inclined to believe that's real volume than, a bit of a fluff volume where they stack it up behind and then as soon as the market comes down to it, they disappear. When generally on the offer, if they stack up the offer and it starts to get there, more often than not, you'll know it's a fluff. As soon as it starts trading that level, bang, it's gone. The volume would just disappear. I saw it on once on was it RA P wrap or something else, like a million on the offer, and they just disappeared as soon as it started getting hit at that price. But anyway, this is, like I was saying, it's just as an example, a bit different to what was there before. Sorry, Vin just reading it now. Thanks for that, Lauren. Thanks for the helping hand, mate. Anyway, that's WAF. Just to draw it up, why I think it looks good. This is the weekly chart. I think it's got some legs, and if it's getting some legs, and you can see the volume picking up, obviously little Goldie, you see nice sort of through that 20-cent zone, and you've got these highs that it's had a bit of an issue with at 45. Pop up here, pull back, consolidate there, back up again, washed out the highs, come all the way back down again. Fell short of it, which is always good. But the thing is, just take that off. This leg down, it's starting to break. It's broken up. So maybe that's the low. It's a minor, ever so slightly higher low than previously, say around 18, 19, at around that 21 mark, high low there. And we popped out. So we've broken this downtrend. So really, to me, that's either saying we're going to continue this chopping around between this wide range and we're heading to the top end around that 45, or this could be the start of the new leg up, which could take us through 45. We just have to wait and see. Stochastics in a good zone, some good volume built up and we sort of leg up. Another good volume was that last week through here. And it's really just this consolidation that we're keeping an eye on at the moment. I'm biased that now after seeing this, once we did the same thing here, we built a high low, up we went, back up to the top end. I'm biased up for this. So I just want to see that start to build. You can see the MA is crossed over, whereas here they were still up, it was consolidating. Coming to that point of agreement before it popped up. I just want to see essentially, I don't care if it pops up here, I'd love to see it pull back, build that higher low around 31 to 32. And ideally, if it does pop up through this previous high at 31.5, so it gets to 32, even 33, pull back, build a higher low, and then I want to see those daily MA start to rise again. And away we go. G'day, Jason. So I hope that makes sense there, guys. Feel free to chuck in some charts now. I've probably banged on enough, haven't I? Put in some codes you want to take a look at. It can be anything, even if you want to take a look at some crypto. They are just going bananas. I don't know if anyone watches it. Bitcoin. I know we've got a few that trade it in our forum. If anyone doesn't know, the forum is Discord. We've got a Discord forum there. Feel free to if you want to get involved and you don't know anything about it and you're new to the stream, new to TradeSetup, just send me an email to support@tradesetup.com.au and I'll send you a link that you can join in, have a bit of a chat. You got to keep it clean. Isn't that right, guys? Lauren, Helen, we like having a bit of a gag, but okay, CVN, great. That's a good one too. Good one to talk about. I'm going to hate it because we were long at one stage around a 42. I was long around there. We were long on the setup, on TradeSetup, and now it's at 50 something. The gatekeeper, Helen, the gatekeeper. And we've got Bitwise, the politician, and old Lauren in there as well having a chat. So it's a good little chat too. And we've got the fundamentalist Paul. I don't know if you're still listening, Paul. So there's a good range of opinions to look at too. It's always good. It's going to help you trading no matter what, whether you agree or disagree. So CVN, let's get into that. CVN, you can see it's probably better looking at the weekly chart. Look at it monthly. I like this. I mean, everything looks great. I mean, the trend is on the rise in the monthly. Some good volume pushing up here. Probably go back to the weekly. Good volume when it popped up here. Big sell-off, and it's consolidated the higher level around that 32.5. You can see it got to the low, popped up, took out that low. Then it started holding higher levels. So again, and then it held. This was kind of important, I think. Held that higher level at around 40 cents before we got this push up here, which it targeted 62 it hit, I think. So yeah, that's the leg that's killing me. This is what we're looking at on our daily before we did get that lower high press into the actually I want to talk about this. If we make that smaller, it's important. I don't know if anyone can see it, but this is what if Paul's listening. It's really important to, and I bang on about anchors, and if you don't understand it, I'm sorry, but that anchors is to the swing. You swing highs, swing lows, whatever you want to say. We call it anchors. People call it different things. I think it's important to know your anchors, where the levels are, um, because we talk about lower high. Say a lower high is a form of pressure from sellers, but it doesn't mean too much unless it's broken the anchor. And a lot of time, a lower high can bring in sellers. You get nervous, you get scared, you get out, but it hasn't broken the anchor to the uptrend. And all of it is that sort of pullback, clean out a few people, and then off she goes again. And if you can see this little move here, even though it broke through, that looked like it was going to roll over and come down. If anyone can see the anchor, I'll draw it in a different color. For me at that stage, the anchor was just through here, probably 40, 39 and a half, 40. You can see it's popped up. You got a little red candle, had a bit of a pullback here, popped up, bit of a pullback, popped up. So that was the anchor to the trend. So you get that pullback. Okay, we thought it was going to continue and go up again, took out the highs. Instead, what it did was built this lower high and pressured down. So that would have just washed out. And then it's got a potentially at this stage, when you're looking at it here, you've got high, high. You were looking for this to be another lower high, especially on this green, this red candle. But instead, boom, I don't know if it was the back of news. I think it was in the back of news. So the market was essentially consolidating, waiting for some sort of news to come out, which is obviously good, and the market took off after that. But it's important, especially if you're a longer term trader, is to really know exactly where your anchors are, so you're not going to get fluffed out of a market. Steve, yeah, I'm not at all at the moment, Lauren. I'm going to say something bad just to annoy you because I'm not in it. Oh God, that still kills me. There's so many that you just see take off without you, or you've been in it, haven't jumped back in again, and just missed that. But anyway, so that I thought we'd just talk about the anchor to that trend up. So a lot of the times, if this is the move up, and that's your latest anchor, so what we're talking about anchors here. The anchor moves as soon as you break this high, that becomes the anchor. You break this high, like here, that's your new anchor. So a lot of the time, the market can fluff around. It can do whatever it wants. It brings a lower high, and just to clean out, does all this chopping around, but because it doesn't break that anchor, it's still bullish to me. And then you just got to wait to look for your entry. If the market, so you get something slightly different, which change colors again, so the market presses up, doesn't get through the high very much, and then comes barreling down, takes out the anchor. This lower high here is going to worry me all the time because it has broken the anchor. So that what that's going to do for me, I look at a lot more selling that's ready to come back in again. That's the way I would view that. If it doesn't break the anchor, I look for the longer term players that would probably look at it as they're building the position, depending on what part of the trend it is. Whether we're early on the trend or we're late into a trend. If they're going to build a position, they want it as close to that sort of swing level as possible, and they're going to average at a better price. So when it's doing this kind of action in blue, it's a great level. They build it, take out the highs, they're ahead. So it gives them something. If they have to get out of some of it, they're going to be up. The average level is going to be raised, but they can always take some off at a profit rather than a situation where they're buying at these highs. I hope that makes sense. But if you break the anchor, like we've got this type of price action, it comes down, breaks that anchor, and then builds your lower high, lower high, lower high. I'm a lot more nervous that this is going to be sort of one secondary major leg down to do a clean out of a major trend. So that if this is just the start of a trend, I would expect a blue potentially, just to mess around with some buyers. If this was late into a trend, we might be looking for a macro correction. All right. And macro correction is this potentially in yellow where you're doing this, you're popping up longer term. We're right up here, then boom, we start to go down, macro correction. And then, same as this, except this is your leg up, corrective action on the weekly, daily action, and up we go again for the next leg up. All right. Now, if that doesn't make sense, we're probably going to do some streams. We're going to talk about it a bit in hopefully the near future. Davin and I will get Davin back on to have a bit of a chat with you. Let's see again. Back to the daily. Not much to say about the daily. I would want to see this, from a very tight stop. If it can take out that high at 58.5, you can have really narrow risk, low of 52.5. So you might have your risk around 50, 51. And you really want to see it needs to take out that high at 62.5. And then you'll probably be targeting right up to 69.5. So this trend up here. You can see right at the start, obviously got a bit ahead of itself. A lot of heat's come out. but it spent a lot of time. So what's that? September last year, a lot of time consolidating that 40 level as well. Spent a lot of time before it took off. Now this could be the start. We're sitting on top of the daily MAs here. This could be the start of a nice strong leg up, and it's a lot more. How would you say? A lot more controlled. Controlled is the word I'm looking for. So this leg up, so it's a lot more controlled, which could mean a longer term, stronger term, if I can use that word, move higher. You know, to not just trade 30, but get up through a buck and so on. Potentially, what's that highs it's been to before? It hasn't been the highs $1 before, but you know what I mean. If this could be a bit more controlled, it doesn't look so controlled on the monthly, but even on the weekly, this looks a bit better. You know, it's spent a lot of time consolidating a higher level at 40, just controlled on the way up, and I think that could be a good one to hold. BG, oh, we got here CVN, XRO. Let's get onto that before I run out of time. Don't really need to talk too much about it. Vidnet's, who put out that? Lauren. It's going higher. That's the weekly. It is extended up here, but it has been extended since below 50 bucks. It's now 62. Was it 61.20? Traded through 62.5. So that's, you know, what we always say. I do get caught sometimes looking at it's overextended. I don't technically like to get into something when it's overextended to the upside because I think it's a lower probability trade. But the difference is this was within, you've got your macro correction here. It's starting to come out. You can see the lower high that come into play around the 40 buck mark. If anyone can see that, probably better. Just here on the weekly. Now we'll go back to the weekly. That's your lower high here. Sorry, I'm talking about higher low. So you had a good trend up. This is the macro trend. You can see it's broken the anchor through here. Actually, let's draw that up. It's a good one to draw. There we go. There we go. So you've got leg up. This is your corrective phase. This is your anchor through here, and you can see it broke through there. So that really, well, let's just draw it. 1, 2, 3, 4. It started pushing down, retest the lows. I'd say that's the lows. Then it started popping up again. This pullback here, prime. So if you're trading something like that, you know, look at all the price action too. You know, not much wrong with that at all. On the weekly chart, you can see that's your leg up, and now we're really just starting to. This is the leg up now, so we've got to really look at it. If you're looking to buy into it, how much further can this leg go? You know, 62.50. Say that's your leg up. What'd that go from? 17.50 to, well, I'll say 52.50. What's that? 15 to 50, 40, 35 bucks. 35 bucks from say 35, give or take. It's around 70. So it still could have a bit to go on the upside. You know, looking at this weekly chart, if that's the extension, that's your leg up, that's the extension of your leg up. As long as this sort of stays relatively controlled, it might be that the contractions lower back to the MAs can take a bit longer. So I would say you're probably going to be a longer term trader just to sit and hold this one. But there could be, you know, if we're looking towards that 70 buck mark, there's a bit of fat in this one. Yeah, but that's your first leg up. Macro correction, secondary leg up. Sometimes when they've gone so hard and it's hard to buy something that's 62 bucks anyway, it could easily just continue to drive up to 70, you know, or that mark before it starts having another macro correction, and then we'll see how it goes. On the daily, just go back. The daily trends up as well. And that's probably what Helen just said. She's got a couple of cells on that have popped up on the system she's got going. It could be, assume it's just because we're struggling up at these, you know, that level there. A nice strong market, you'd want to see it get through a bit more vigor, I guess, rather than pop through one day and the next day get sold off. Ideally, if I was going to buy this, I'd be wanting to buy, you know, pullbacks to the MA, pullback, pullbacks in here, potentially there, and look for just some sort of entry pullback to the MA there. It just gives you a bit of room. So if you can buy there, you know, even if you just, I don't like to do this too much, you set at the bid at 60 bucks, your risk is at 58, you got a $2 risk. I know what percentage term, that's not that much, is it? For a couple of percent risk. You can sit there on a pullback, you buy at 60 or around that mark. If it starts to rise, you can buy it. If it just comes through, it got to 59.5. Okay, you bought it at 60. You know where your risk is going to be below one of these higher lows, and then if you get stopped out, there's a good chance this trend up is finishing, and you're not risking too much at it. But if you wait to pull back and then buy through the highs at 63, say, you're probably going to take a fair bit more heat if it does pull back and just takes out the highs by a few cents and turns around and retraces for the next few days. So when they start to do that, it just might mean that it's running. The trend is up for sure, but it might just be running out a bit of steam as it starts to get towards 61, 62, 63 bucks. Because the higher it gets, the later on the trend, a lot of the times it's harder for people to buy. It's a less probability trade as well, and then you start to stack up with all the buyers already. So there's a whole lot of fuel that's already in the market that's pretty much just waiting to come out of the market. So for me, the later it's into the trend, the less likely I'm going to get in, because the more likely I think this thing's going to roll over. And if it does keep going, I say be it. I don't care. There's more to trade out there anyway. So that's what we got. What was that? XRO. What else we got? 2-day sales, not on the weekly though. It's an island pattern as well, always prone to reversal back. Yeah. So I think that's that key candle there. So Allen there. What else we got? XRO, AMC. The daily. Okay, what do I have it on? We had an alert on something that was an AMC, was it? Something else? No, forget about that. Weekly, yeah, you can see it's just reacted off that zone, which it's traded up there 1, 2, 3 times before, and you can see it's interesting to take a note of all these sorts of patterns. You had the market press up, good corrective price action here, good push up to the highs up here, come back down, try to go again, couldn't, had to wash out this low, reset itself, go again, and the third time it couldn't really get through those highs. You can see this action, it had to go a bit deeper, so down to that sort of that 13 mark as opposed to 14, just below 14, when it had to reset, wash out here, reset it here. If it can't get through, the second time it's essentially a double top, triple top, the market's more than likely has to clear out a few more buys to reset itself before it can have another go at again and potentially break. Problem is, it's reset itself around that 1275 mark, 13, gone straight back up and found resistance again. So found some selling pressure again up at 1678. So 1670, what was that high? 1670, 67, 1 cent lower. Is that right? Oh no, 11 cents lower. Either way, that was pretty funny. So you can see it's straight up there again before we started getting a bit of some corrective price action that's come back to the MA. So if it doesn't hold here and reset itself, and this is a weekly, it's not looking too bad. I mean, a bit of volume. I think that volume is probably more attributed to rebalancing the index than anything else. I think we were looking at SLR on Friday, and a massive volume at the close. It popped it up about 3 cents, I think. It was probably just resetting the index, index weighted index trackers or whatever reset themselves. So that might be the volume from last week. If we go back to the daily. Yeah, it was Friday's volume was pretty good. So really, this weekly it has to sit here. That little washout lower, if you go back to the daily, which was down to say 525, little washout lower, I want to see pop up, consolidate, build some high lows above 1550, for instance, and then, and this is what I'd be looking for. I think it's important. Say that's sort of your trend down. We've got a bit ahead of itself. So you have 1, 2. If we can pop up, ideally, what I'd like to see. How does it move up? So well, we had 1 deeper pullback, and we're about here. I want to see, probably move up at least to this trend line, and then potentially, I like to see when they've gone so deep, that sort of secondary move down on a small pullback, but not take out this low, and then start to lift again. And if you can get some high lows, so all this takes some time. By then, you probably find that it's broken through this trend line. Or if you're buying a break and you've got your high low, you go, okay, confirmation is I'll buy through that high, wherever that may be, off a higher low, and that's going to break the trend line at the very minimum there. So that's ideally what I'd look at, that sort of price action. I want to see it spend a bit of time, especially after this deep pullback. But I don't want to see it get through that 15.25 mark, because on the weekly chart, that's sitting on top of the MAs. Looks like it's doing good. Stochastics, good volume come through too. You can see volume through here. Draw a little box, volume come through there. It's getting supported. Potentially it's the weekly, it's the longer term buyers. You've got some of these short term who bought it here maybe or here, got cleaned out at the moment with this sort of corrective price action. But like I said, if I wanted to buy this and continue that longer term trend up, where I think it's going to take it through those highs, at least to retest them. I want to see it spend some time and really build that. You want to see it build a solid base. The longer time, the more it cleans people out, the more times it resets at this high, the longer time it takes to reset at the high, the more likely that it's potentially going to go straight through those that 1675 mark. Now, if we just turn around from here and just go boom up here, I'd steer clear of it. I'd just stay clear, because I think because we're up at those weekly highs, remember all the overall markets, the US, we are all-time highs, all that sort of stuff. There could be, if we just pop up to say 1625 to 50 from here, I'd steer clear, because I think it's going to produce a lower high like this, and we're going to have this big corrective action to at least 13. So it has to. That's why time's important for me at this stage. I want to see it chop around here, chop around a bit of time, and then up we go. For BGL, oh, you're teasing me, Laurent. BGL, hate it. For anyone that doesn't know, we had this in alert somewhere around here. We got stopped out, and now it's turned around and it's gone straight back up again. And I think it had, I don't know why, there's no real news, I don't think, that came out. Let me just see. Overlays, news. Oh. No, that was after the washout. There's no real news that drove it down. It's just, we got that sort of clean out. We got in somewhere around 67.5, I think it was. Popped up, was looking good. No, it wasn't 67.5, it was somewhere in here. It was looking good. Took out those highs. You don't want to see that. You don't want to see the highs go and then start to get some red candles. So we were concerned pretty much right off the bat on that one. And of course, raised the stop to somewhere around 63, got stopped out, come all the way back down here. So it was looking fine. Hit 55, just turned around and headed straight back up again. Was it 57 low? I can't remember where we got stopped out. And it's looking good at the moment. It's looking good. It is getting a bit stretched up here. So I think, if you're long, good. If you're not, I wouldn't get in. It could be a case of this. You're sort of getting, well, no, probably not so much that. Could we just got through those highs like before? We just washed out these highs here, straight back down again. We could just wash them out straight back down and sort of resume this trend. So it's got a lot of chopping to do, especially the way gold was going up. When this was backing off, gold was going up. So it's never good to see your gold stock go down when gold itself is going up. But either way, that's just one we have to chalk up to a loss. But it is, the trend is up. Go down to the weekly, trend is up. Probably looking to close the gap, maybe at 90 cents. Who knows? Either way, if you're holding, hold it and just try to tighten your risk up. Yeah, potentially blue sky ahead. No, we'll see. FBU. Yeah, LNG. I'll get onto LNG and we'll probably call it a day there. FBU. In all honesty, I wouldn't be looking at it just yet. Trend is down on the weekly. Trend is just turning up on the daily, but that's not a convincing trend at all. It's so, if you bought that sort of the way I style, I would buy off a higher low, say here. Once that a push through 506, I'm up 10 cents. After so many weeks, I'm not willing to hold something move so slow like that. I don't think that for me would be a good one to trade, because I think if you bought it, even if you bought it here, you hold it for a few months, you don't get much appreciation in price. And to me, that, if you remember that the weekly is down, this could be just taking some time, boom, and then comes down in the screaming heap again, like it did here, like it did here, like it did here, and like it did here. It could be that, I mean, you never know, that this sort of, it's not convincing. That move up there on the weekly from the end of last year till now is not a convincing buy. So for me, if I wanted to buy, I'd probably just be steering clear. Oh, it could be. I don't like things that come down and then gradually grind their way up. Remember the ASX? Um, oh, where is it? Oh, on the daily here. Sell off here. The way it was grinding, you would want to. You don't want to buy it there. The way it's grinding back up after this sell off, it took out a few levels. You don't want to buy into that sort of grindy price action. That's probably a bit like potentially. Oh, go back one more. This action, I don't really, because at the very least, I think it could potentially go back down and test some of these lower levels. And if it tests and rejects some of those lower levels, then potentially look for a higher low. And then I think you need another wave of buyers that start to look to this as the bottom. But at the moment, on the weekly chart, the bottom is not confirmed at all. The swing high, swing low here, lower high is right up at 650. And that's probably why, because we come down so hard, we could be grinding sideways for a while, then boom, you don't know what's going to happen. So there's better stuff out there, isn't there? Last one we get onto, what was it, LNG? Ooh, that's your weekly. There's not much to be said apart from horrible. Daily, yeah, daily's down. So at the moment, not much to do on that one apart from wait. Hopefully, still holding from 67. Wow. All right. So you're somewhere around here. Yeah, this is not this. The one good thing that could be in your favour. We had this bit of a blowout, more controlled. This is more of a blowout when you get it in one day, boom, straight down. But then it bounces back quite quick. This has been more controlled day after day, selling, selling, selling. Potentially, you really do want to see a bottom put in here and then start to take out some of these minor lower highs, like 30 and a half, to have any sort of chance that it's going to start to lift. But I think to lift, it's going to have to repair itself quite a bit and go to the weekly, and it's been going sideways for years now. Don't know why that's changed, from pressing up to $5 all the way back down, but this has been quite constant. And if you look at these lows, was it say 27? We didn't get down there before, did we? It was around the 45, lows of 36. So we're sort of in those new lows, and it's just showing that people have had enough. They're just jacked of holding it. It's pretty much it is. Um, and potentially you could go lower. I mean, you don't know. So for me, I'd probably be looking to sell into a pop and just consolidate that money and put into something that's going to grow your money back. So when you can sit and hold something for, you might be right, but whether it's going to be next week or in 10 years' time, you're going to be right. Get back to 67. It's easy to say I've been holding this since 67. It's now got out at 87, but I held it for 5 years or 3 years or whatever. To me, you could probably make back more than that small gain by trading those funds again. So say you got $5,000 in it now. Put your $5,000 to work in something that's going to rise, excuse me, and rallies, and $5,000 goes to 5.5 or 6. Then in a couple of years' time, that $5,000 might now be back at 10. So you doubled your money in essence, and you probably made up the loss that you might have had on LNG, just because you don't want to hold it. You just get out, and that's sometimes it's hard. It's really hard to close out on losses, but sometimes it could just be the best thing. It resets your head. It resets. You can make use of those funds into something that's probably potentially more worthwhile, and it's going to appreciate a lot faster. Because I think things like this that come down like that, they could go sideways for years, even if they, because you need good news that can keep piling up, and people would just be so bitter with it. You got to remember these sorts of moves that come down. I know for me, if I bought that and took a loss on that, I wouldn't go back. I don't care if it's starting to rise. Sometimes I just look at it and go, nah, I'm stubborn, don't like it. It's bit me before. Once bitten, twice shy. I would just steer clear and I go, nah, I'm going to go into something else, even if it starts to look good. So there might be a whole lot of people that are a bit like me that had bought it in here, going, nah, So what that's doing, so if there's 100 traders going to buy and 50 of them being, burnt by this move, potentially they're stepping away. There's only 50 left. So it's just less volume that's willing to get back in again. So it has to spend a lot of time to repair itself, to build up again. and start building that excitement back into the stock. Because you're never going to be excited when you get nabbed, boarded in here, and you've got out way down here and taken a bit of good hit on it. I hope that makes sense anyway. AMP, yeah. AMP, a bit of a dog at the moment. They got smacked down here, and it starts to. You're going to get those bargain hunters because people, okay, think that's an anomaly, and then they buy it into here, bang, straight back down again. So what that's doing is just killing the sentiment too. Um, every time it pops up, if you bought it, you bought it here, you might have got chipped out at a small gain or small loss. You got lost there, so you try to buy it again. You're going to take another loss. You're taking another loss. Sooner or later, you just walk away and go somewhere else. And I think what that does is kill the stock, kills sentiment, and it's got to spend some time doing some things, change of management, whatever it's got to do to build itself back up again. My broker, I could say firsthand that brokers no bugger all. Not all of them. I'm being pretty generalised, but I remember I was a broker. Knowing what I know now, I know I knew nothing. It was more luck if I got onto a winner. Anyway, um, we've gone a bit over time, but brokers sending your broker. True. So yeah, well, we'll finish it there. Thanks very much for joining me, guys. I hope you enjoyed that. If you did, it'd be much appreciated if you can share the stream, give us a like, all the sort of that friendly stuff. And just remember, I'm not going to be back in. I won't be no stream on Monday, so there will be the following week. So just got a week off. Well, I'm going to enjoy myself. You're right. I think there's a nice bar pool there, or pool bar, whatever you call it. Apparently, it's a really nice area, and we've got some. We go see some crocodiles. I think there's some few other things. My kid's going to love that. I'll probably love it too. I'll be scared. I'm the most scared out of the whole four of us. But yeah, it's going to be great fun. I hope you all enjoy yourself. Enjoy your weekend too. And we'll be back in in 2 weeks' time on the Monday. Yeah, and stay safe in the markets, guys. See you later. Bye.